Hi, everybody. Welcome to the webinar. So today's Uninet webinar is going to cover year-end contract items related to cost-plus contracts. While the webinar will primarily focus on cost-plus contracts, if you do not currently have any cost-plus contracts, you are always welcome to listen in. So the webinar will be recorded and should be available within a week on our Knowledge Center, just in case you want to review what we go over again or have someone else on your team that you'd like to see the information. I am Terry Dempsey, and I am part of the Customer Success Management team. Your Customer Success Manager is your main point of contact within Uninet. We're here to help take the confusion out of who you need to contact when you have a question or an issue. We also want to make sure you are getting all of the benefits of your Uninet license type. We do this by making sure we keep you up to date on added functionality and by scheduling customer success reviews or account reviews. We do this to assure that you are using all the functionality that's currently available on your license type. And of course, you can also reach out to us for any additional information on licenses, license upgrades, or additional services. Now, I want to introduce you to our presenter for today. We're happy to have Robin Bell here with us to present today's topic. Hi, Robin. Are you there?
Yes, I am. Can you hear me?
I can.
Awesome. Hi, everybody. Thanks for joining us today. I'm excited. We're going to talk about some cost-plus contracts and what we need to do at year end. But today, I'm not here all by myself, of course, with Terry. Joining us today is an expert from our consulting services group. We have Jean Herbst. Jean, are you there?
Hello. Happy to be here today.
Thank you, Jean. Jean is one of our consulting services directors, and she's going to be maybe adding some color commentary and helping us answer questions at the end. Thanks so much to Terry and Jean, and let's go ahead and get started. So we're here today because many times at the end of the year, your revenue doesn't necessarily match your billings on a cost-plus contract. Why is that? Maybe, possibly, we are billing at one rate and recognizing revenue at another. So that's very common. We're going to show you a couple of ways to make your adjustments if you want to make adjustments. So before we get started on the details, let's make sure that we're all speaking the same language. Our Knowledge Center defines provisional rates as the rate determined by budgets or forward pricing and approved by audit of an outside firm or agency. This rate typically only changes with authorization from the outside firm or agency. This is usually the rate that's used in proposals and in billing for cost type contracts. The provisional rate in Uninet is keyed in manually, and we're going to show you where that is in just a little bit. The actual rate is just that. It's based on actuals. Makes sense, right? We calculate actual rates in Uninet using the cost pool group functionality, and we can update those actual rates every time we post cost pool calculations. You can do that automatically if you choose to. These rates, of course, are dynamic because they change as your actual costs change and are recorded in the general ledger each period. So if you're not using Uninet financials, you can key these rates in manually. Uninet also allows for the effective date to be stored for the actual rate calculation so that reports can show how current the rate is. The actual rate is typically used or oftentimes used when performing revenue recognition on those cost-plus type projects. So we're also going to take a look at what this looks like in the system in just a moment. So let's look at where we perform this setup for these things. On the Uninet menu, I would go to the admin dashboard, then the setup menu, then in the accounting box, and you see the path there on the top of your screen, in the accounting box, the posting options menu. So you see here that the top two boxes relate to cost plus options. On the left, we have our cost plus bill rate options for actual, provisional, and target. I would say that the provisional rate is very commonly used for billing, as we mentioned earlier. On the right, you see that we have actual selected for the rate to use when recognizing revenue on cost plus contracts. This is also very common. Although we sometimes have lively discussions around whether you should use actual or provisional for this, I really think it depends on your perspective. It's up to you. It's up to your organization. How do you want to manage things? You need to think through, what works for you and then make those setup options accordingly. So we see both actual and provisional commonly used here. So there's not one that's right or one wrong. In our example today, we are using provisional for the bill rate and actual for the cost plus recognition rate. And so in that case, we're going to have a difference between the billed amounts and the revenue at the year end. So let's see what our options, actually before we see what our options are for that, Terry, if you wouldn't mind, let's please launch our first poll and see what our attendees are using for billing in their own systems.
I can do that. Very quickly though, Robin, if I may, I want to remind everybody that if they have questions throughout this webinar, to please just post those in the questions box that's part of your screen, and we will answer those at the end of the webinar.
Great reminder, thank you. All right, so you've got the poll on your screen there. What posting option are you currently using for cost plus bill rate?
All right, looks like everybody, we're having a few changes still coming in. Okay, we'll close the poll.
Okay, so we do have some people using actual, but for the most part, the majority are using provisional, which is, I think, what we talked about and what we usually see. Okay, well, let's look at the other side of that. Let's see what our attendees are using for the revenue recognition rate on poll number 2.
All right.
Give everybody another moment to get your answers in there.
All right, looks like everyone who's going to vote has voted. So let's close the poll.
Okay, so about 2/3 of you are using actual and the rest are using provisional. So again, that makes sense because we see both very commonly used. So for today, once again, our example is, as you see on the screen, provisional for the bill rate and actual for the revenue recognition rate. So thanks everybody for participating there. Let's move forward. So when determining the appropriate method to true up at year end, we first need to answer a question. Will actual rates be calculated in time to apply to the final invoice? If the answer to this question is yes, then we should change the provisional rate in the cost structure to reflect the actual rate. Then the final posting will pick up those true up amounts for the final billing. If the answer is no, we won't have the actual rates in time to apply to the final invoice, then we probably want to do a journal entry if we want our billings and revenue to match and record that difference. Usually that's a reversing entry, and that later on would net with any catch-up billings. So let's look at each of these options and look at the steps that we want to take for each of these. So first, we're going to look at the steps that we would need to take if the actual rates will be calculated before the final billings for the year. So in Uninet, we will once again go to the admin dashboard, to the setup menu, and in the accounting box, click on cost structures. Once there, click on the edit pencil for the cost structure to be updated. Within the cost structure, you want to click on the indirect cost rates tab. Okay, so you click on that tab, and then from here, that's what it looks like. You see we have several years defined there. Then we would find the appropriate fiscal year and then click the edit pencil to go in so we can make our updates. So now that we're in edit mode, you can see that we're able to update the rate in the provisional column to match the rate in the actuals column. So there's the updated one there that now matches our actuals. Be sure that you have posted your cost pool calculation and you know that your final actual rate here is up to date before you do that, of course. If you're not using Uninet Financials, you can certainly manually update the actual rate also. And absolutely you want to be able to save your changes, right? So a lot of times people come in and change things and then they forget to save and end up with figure out what happened there. So make sure you save your changes. And I just also want to point out in this example, in our target rate column, we have stored our provisional rate in that target rate column. So we always have it available if needed. So one other step here that you want to make sure you do, when you're running your final billing and revenue post, you want to be sure to recalculate your rates for the year. So let me show you what that looks like. So from our financials dashboard, we navigate to the invoicing and posting menu and then the billing and revenue post. I'm sure you're familiar with doing that. And near the bottom of the screen, scroll down, you would check your include through actuals date and then the box to recalculate the cost plus originally posted in range. So in our example here, we're doing it for the current year. This would bill your period 12 at the actual rates. And then for periods 1 through 11, you would have any adjustments as part of that rate change, as part of your final billings as calculated by the system. Very, very important step to do that for your last one. So that's if we have the actual rate available before our final billings. But what if it isn't? Which I would say is pretty common too, that you don't quite have it ready yet. So let's take a look at what we need to do if we don't have the actual rates calculated in time to apply to the final invoice. So if we don't have the rates available, we may need to record a reversing journal entry, depending on whether the amount billed at the provisional rate is higher or lower than the revenue recognized at the actual rate. So let's take a look. So let's start with the easy one. Let's look at the scenario where billings at provisional rates were lower than revenue, which was recognized at actual rates. In this scenario, everything is pretty much where we want it to be in our financial statements, so no action is needed. So billings were lower than revenue. So you can see here our total accounts receivable, which is both billed and unbilled amounts, and that's an asset on our balance sheet, is a total of $650,000. And then on our income statement, the revenue is recorded using actual rates, and that amount is also $650,000. So in this case, we're just going to leave it alone. We're good to go. We feel comfortable with that. But what if the billings using the provisional rates were higher than the revenues? So here, this is a little bit of a different format than the previous slide. So we're using, for those accountants, sort of T accounts here. For the non-accountants, I'm sorry. But you see my debits and credit columns for my accounts receivable or billed, same thing, which is an asset, deferred revenue, which would be under my liabilities on the balance sheet, and then the revenue on my income statement. So in this case, my billed amount is higher than my revenue amount. Okay, so I'll give you just a second to soak that in. And so in this case, I may want to create an adjusting journal entry. So debiting deferred revenue and crediting my billed account is going to bring me back to where I want to be if I want my billing and revenue amounts to match. And again, I would make that a reversing entry. Okay?
Hi, Robin. It's Jean. Yes. I was just going to put some color commentary in. It may be a choice that people would make there to go ahead and, rather than crediting that billed account, they could also choose to credit their unbilled account. And so, again, the net of the two accounts together would match revenue.
Yes, thank you. Love the color commentary. Keep it coming. Okay, awesome. Thank you, Jean. So one important thing to remember too is that you don't want to change your posting option, your setup and configuration on the posting options. This has trouble written all over it. Just because you can doesn't mean you should. I have to say that. It's a rule. You know, if you change it for the final billing, that you're going to forget to change it back, and then we have a real mess on our hands, right? So don't go here to change it. Just make sure you change your rates in the cost structure as we showed you just a moment ago, if that's what you need to do, and you'll be good to go. So we have a couple other more normal year-end things to consider, such as, updating assignments, maybe closing out tasks, or updating your mileage rates. So when you bill for travel the next year, all of those kinds of things. And of course, the Knowledge Center has an abundance of information for year-end closeout. The more of the project side of things versus the accounting side of things. Always a great resource to go to the Knowledge Center. So that is what we have today, and I'm going to see, Terry, if we have any questions.
Thank you, Robin. We have a couple, but a reminder that if you do have any questions, please just pop those in the questions box, and we will get those answered for you. So the first question is, can you show us again in Uninet how to recalculate the cost plus rate?
Sure. Can you see my Uninet system there?
We can.
Okay, awesome. All right, so from your financials dashboard, in your invoicing and posting, when you go to the billing and revenue post, so towards the bottom of the screen, so you would use, your whatever your date range is. In our example, we use the current year, right? So we want to recalculate the cost plus originally posted range. So this is under your cost plus recalculation option. So I would check this box and make sure that my date range is showing the current year. And that way it's going to pick up that new rate after I've changed my provisional rate to match my actuals. Jean, any other thoughts there?
I think you covered it. And of course, you would go down and also update that post date. I feel the need to
absolutely.
Say.
Yes. Absolutely. Yep. Okay.
All right. Thank you. So the next question is, show us again the posting options in Uninet.
Sure. So this is going to be, you have to be an administrator to get here. So this is under your admin setup menu in that accounting box. And down here we have the posting options. You can see I'm logged in as the controller, and so I have system administrator capabilities. You can also get here from if you're a GL, if you have the GL admin role. But our settings here are provisional and actual for our examples today.
Perfect. Thank you. And again, show us where the rates are stored.
The rates, yes. So same menu. So I don't have to go clear back up to admin and set up. I can just go, I have my accounting menu open over here on my left, and I can go to the cost structure. And within one of my cost structures, you want to pencil in or go into edit mode. And on that indirect cost rates tab, and I'll come down here to fiscal year 2017. And you can see that these fields are now open for editing, and I can change it to match my actual rate and save. And there we go. Easy. Wait, where's my easy button? Hold up.
That was easy.
I had to do it.
It wouldn't be a webinar without it, Robin.
That's right. Not one of mine anyway.
That right now is all the questions that I have. Again, we're going to give you just a couple of more minutes if anybody has a question that they want to ask. You can just pop that in the questions box.
And how about we'll go through the final few slides, and then if we get any more questions, we can certainly pick them up.
Perfect. So I also want to share with you, this is our wonderful customer success management team. So every one of our customers, your customer success manager should be listed on this beautiful slide. Again, what we always want to make sure that you understand that our goal is to help you reach your success goals. So if any questions that you have, please reach out to your customer success management team, your customer success manager. If you're not sure who your CSM or customer success manager is, you can always email us at csm@uninet.com. That's a global email address, and that's monitored by the entire team. And then your customer success manager can reach out to you. All right, so as we get to the end, I have not seen any more questions. So again, if you have questions, if you think of a question on this webinar that you encounter later that you wished you had asked but did not, just reach out to your CSM or the csm@uninet.com email address, and we'll be happy to get back to you with answers on that. So thank you again for joining us today, and a big shout out and a thank you to Robin and Jean for the great content and the help on the Q&A. A reminder that this webinar presentation will be available within about a week on the Knowledge Center. And if you have questions that we need to follow up with, then please just let us know and we'll follow up with that. So thank you again for joining us, and enjoy the rest of your day. Bye.
Thanks, everyone.